what they're doing is Bitcoin lending, and a lot of it is for houses. People have huge amounts of Bitcoin on their balance sheets, and they want to go buy a nice house, and so they just borrow against the Bitcoin. So we're seeing it being used as collateral significantly already in the kind of DeFi or CeFi sector. But we've already seen MicroStrategies borrow, I think, from JP Morgan or lend to JP Morgan. So it's showing that at the banking system level, as you're saying, we're starting to see the early signs of this is a collateralized product, and therefore, the demand can go up significantly because it's not dead money.
Bitcoin has climbed above $66,000, rekindling optimism and predictions of a breakout. Though it has yet to set standards, psychological barriers, and regulatory challenges that must be overcome for widespread business adoption. Hart explains that criticisms of Bitcoin often arise from its potential to disrupt the existing financial system. Mark Hart and Raoul emphasize the need to consider 6 key asset characteristics to grasp Bitcoin's value. As global adoption expands, increased accessibility drives price fluctuations, spurred by growing awareness. Hart highlights Bitcoin's superior security in comparison to vulnerabilities in traditional assets, such as the US dollar. He notes that holding dollars imposes a tax through inflation and productivity gains, whereas Bitcoin's inflation rate remains around 1%. Catch more insights from Raoul Pal's conversation with Mark Hart by checking out clips from their interview. If you found value in this content, hit the like button, subscribe to the channel, and enable post notifications for future updates. Enjoy the video.
I wouldn't say that I'm religious about Bitcoin per se. I do think it's has the potential, and Bitcoin related, to be extraordinarily, disruptive to the sort of incumbent financial system. And I think that's why you get sort of the, shrieking attacks on it as an incumbent is sort of under threat. But I guess to me, and I've talked about this, I think, on here, it's like trying to understand sort of the value of Bitcoin or a value of any kind of asset, what makes it, what gives it value. 6 characteristics that I've outlined before that kind of define the value of any asset. Where I think we are now is as Bitcoin is kind of continuing to be adopted, there are a couple of those areas. Like if you think about it, to cut back, so access, how easy is it to access something? And I think that as Bitcoin is spreading globally, that access is improving, maybe relative to other currencies, other stores of value, et cetera, et cetera. Awareness is continuing to improve, and it's always changes in the 6 factors that will drive the price. Security, obviously, Bitcoin security at this point can be pretty well perfected. One of the problems, with alternate assets like the dollar, is in fact a lack of security. It doesn't mean that there's no value in dollars, or there won't continue to be value in dollars for a long time, but there's a tax on dollars. I pointed out that I think that tax is the sum of sort of productivity gains and inflation. So that's sort of your bogey that you have to hit, or that's the tax on holding a dollar. So and I'll walk through as a little explanation. I like to give, if you have a basket of goods that are $100 beginning of the year, $102 at the end of the year, then you've had kind of 2%, CPI inflation. But if productivity gains, non-farm productivity, had been, say, 2% over the year, then that basket theoretically would have been worth $98 at the end of the year. And so it's that delta is sort of the tax that holders of dollars are paying right now. With Bitcoin, I guess it's a little over 1% inflation and supply, and so that security seems to be much better for Bitcoin. And looking forward with expected significant deficits and debt to continue to be run up in the developed world, you would expect a monetary policy monetary policies that would facilitate that just debt growth. And that's the world we've been, living in for a long time. But I think that from Bitcoin's perspective, and, gold and other types of fixed supply assets do particularly well, kind of in that environment. Patina is just simply the gloss, the feeling maybe that you get
status
I think
almost
status, right? And it could be, there are different reasons to hold, kind of different assets. Maybe Tesla has been overvalued for a long time because of the personality and the image that Elon Musk puts out. And I think, Bitcoin has some of that, return on investment. There's not actually there can be a return on Bitcoin. Typically you think of Bitcoin as you're holding it in your wallet and it just sits there and inflates, or you hold it in an ETF and there's a small negative carry holding that, but it benefits. I think that one thing that's interesting though on, return on investment is that, Bitcoin, like on the balance sheet of a corporation or in the hands of a more sophisticated player, is actually worth a lot more than a Bitcoin in an exchange.
Mark Hart further illustrates how companies holding Bitcoin on their balance sheets can trade at a premium, creating unique opportunities. The conversation explores how Bitcoin's volatility enables strategies like selling options and monetizing fluctuations. Hart notes that corporations can also capitalize on their Bitcoin holdings by lending it or issuing convertible bonds with the potential to convert to stock while earning interest. Hart and Powell also tackle significant obstacles to broader corporate adoption. Hart highlights that accounting rules discourage companies by reporting losses but not gains, while psychological and regulatory challenges further impede progress. Yet, he suggests that changing accounting methods could boost adoption by allowing businesses to mark positions to market. The discussion emphasizes Bitcoin's value as collateral, which Hart identifies as a key factor. Companies benefit from price gains by converting bonds to equity, eliminating debt. Powell adds that investors use delta hedges to manage downside risk effectively. Despite these hurdles, both agree that the potential for greater corporate adoption is promising. Watch more interview clips with Raoul and Mark Hart for further insights.
There are companies out there that, buy Bitcoin and they hold it on balance sheet. Universally, those companies sort of trade at a premium to the Bitcoin on their balance sheet. So and of course the volatility of those companies is through the roof. So there are opportunities to do, all kinds of things, whether it's, if you have a constant strategy of acquiring Bitcoin, you can, sell puts and acquire more as it comes into you, or you can monetize that volatility. There's a correlation, obviously, between interest rate and volatility. And the higher the vol, the higher demand for return. So corporations can either use their Bitcoin and lend it out.
What is the trade that they're doing that's absorbing billions and billions of dollars of this?
I guess like a convertible bond has it's basically two components to it. One is a bond that invests and you get a rate of return and interest. And then there's also this component of optionality, which is you basically have a bond and an option. And the option is, to convert that bond into equity at another price. So because of very high volatility of Bitcoin and a high volatility of companies that hold, the stock prices of companies that hold, Bitcoin on balance sheet leads to very high realized vol. And so the value of that option component of the convert in a much higher volatility environment is worth much more. So the play on of course, the company side is a company is, you own Bitcoin and Bitcoin goes, number go up and your stock price goes up and, eventually those bonds are converted into equity. They're no longer a liability, but, you've kind of sold that option at a Bitcoin price equivalent, Bitcoin per share price equivalent at a massive premium to the actual price of Bitcoin. You take the proceeds, you turn around and you buy, Bitcoin and you rinse and repeat. From the ARB's perspective, they can get a steady return with this gigantic call option. And that, and what they would do is they would buy the convert and then they would delta hedge their position, short out the stock, buy the convert to some extent. But, the possibility is, of course, that you get you have your you're downside protected. Yeah, it's almost mystifying that there hasn't been, much more corporate adoption of Bitcoin on balance sheet. I think part of it has to do probably with the way it's accounted for, where you don't recognize gains in the price of Bitcoin on your balance sheet as earnings, but you do recognize losses. That accounting treatment, I believe, is going to be changing at the end of the year. People have the ability to mark their positions to market. I think that'll be a change. But I think that generally speaking, the psychology, it's kind of tough to go as a CFO of a company or a CEO of a company and do something that's so out of the kind of mainstream. And if you fail, you want to fail together, or most people do. And right now, you're kind of on an island if you're out there, pursuing that strategy. And there are probably a lot of other kind of hidden forces that are, also discouraging corporations from, holding Bitcoin on balance sheet. I mean, the math for a bank, they can't custody a Bitcoin. It eats up their capital for doing it from kind of no return. And that's actually kind of what I was getting at, is the number 6, factor that gives value to any asset is used as collateral.
In other news, October is often a great month for Bitcoin, and the asset's recovery from $59,000 on October 10th has transformed commentators' perspectives. Dan Tapiero, founder of 10T Holdings, believes Bitcoin will reach new heights once it regains price levels not seen in 4 months. He observes that Bitcoin's price is coiling and coiling, indicating tightening price action, which often precedes a breakout. Tapiero is optimistic about Bitcoin's ability to reclaim lost territory. Jella, a pseudonymous trader, shares this sentiment, predicting that Bitcoin's lengthy consolidation will come to an end. Since April 20th, Bitcoin has consolidated in the $58,000 to $72,000 range. Gel emphasizes 2 higher lows, a higher high, and prices pushing for new highs, claiming that the summer lull is behind us. Gel's optimism originates from Bitcoin's previous October performance. According to cryptocurrency trader Matthew Hyland, Bitcoin's 10-day simple moving average, SMA, is rising. Historically, when the 10 SMA rises, so does Bitcoin's price, which happens 80 to 90% of the time by 2024. This technical indicator implies rising optimism. Bitcoin's ascent has fueled speculation about a possible breakout, with traders eyeing $70,000. Tapiero forecasts a major move once this level is violated. Dan Tapiero stated, "Break $70,000 and hell will be let loose." Gel stated, 2 higher lows, 1 higher high, and prices pushing for new highs again. The summer lull is over. Let us have some fun. Hyland said that Bitcoin's 10-day SMA going upward has typically preceded price gains. Tapiero, Gel, and Hyland offer unique insights into Bitcoin's market dynamics. What do you think is the primary barrier to widespread corporate adoption of Bitcoin, and how can companies overcome it to capitalize on the opportunities presented by this digital gold? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.